In today's video, we're going to talk about how to clean up your credit before your next car. What's up guys, it's Gilberto from Credit Guys, keeping you up to date on all things credit and finance related. Be sure to like and subscribe to stay up to date. Let's get into it. While financing a car is easily one of the most costliest ways of acquiring a set of wheels, sometimes it's unavoidable. Perhaps you just don't have the cash to buy your vehicle one-off, or you're planning to own a specific car for the long term. Even so, one challenge might present itself if you opt for this path: a low credit score. And just to expound, a low credit score can mean a bad deal because you will have to pay high interest on that vehicle. But that's not set in stone. If you clean up your credit beforehand, you can guarantee a better deal once you set foot at the dealership. With that in mind, in this video, I'll walk you through the steps for fixing your credit score before buying your vehicle. Stay tuned. Getting right into it, let me tell you a little something about how your credit score affects your interest rate. Granted, other factors such as income, debt, and so on affect your car loan interest rates. Even so, the credit band or tier your credit score falls into is perhaps one of the most important considerations. According to Experian, there are 5 credit bands: super prime, prime, near prime, subprime, and deep prime. On your screen is data on the corresponding car interest rates for these 5 tiers from Experian's most recent State of the Automotive Finance Market reports. Basically, the chart communicates this: if you have a credit score above 780 or fall in the super prime band, you'll have the best shot at getting an interest rate below 3% for new cars and between 3 and 4% for used cars. If your credit score is less than 501, or in other words, falls in the deep subprime credit band, you can expect a rate above 10% for new and used cars. But just to clear things out, each lender will also have their own chart. For example, if you're getting financing from, say, Toyota Financial or BMW Financial, you'll be placed under a specific tier depending on your credit score. And as you can probably tell, that tier determines your loan car interest rate. Now, referencing the Experian chart, let's do a rough calculation to show you just how much difference your credit score makes when buying a car. We'll use the NerdWallet payment calculator to see how much interest you'll pay as deep subprime for a $25,000 brand new car and compare that to the interest you'll pay as a super prime for the same vehicle. So the results are in. As deep subprime, you'll pay a combined total of $6,896 in interest. But as a super prime, you'll only pay $1,296.80. Now, as you can see, you'll pay over 5 times more for your brand new car if you have a poor credit score, assuming every other thing is the same. Do you really want that? I guess not. So stay tuned because I'll give you some practical tips for fixing your credit score shortly. In the meantime, let me draw your attention to FICO scores because about 90% of the car loan industry uses them. Specifically, most financiers use the FICO Auto Enhanced scores or Auto Industry Option scores. The main difference between standard FICO scores and FICO Auto scores is that the latter will largely consider factors such as how you handled your past auto credit or financing. And why is that? Well, since they are car auto loan providers, information on how you handled your past vehicle loans can help them better assess you. Speaking of, your FICO Auto score gives lenders information such as your payment history, your settled accounts, repossessions, collections, auto loans, or leases included in the bankruptcy. So if you have any such issues or delinquencies, your auto FICO score will reflect that. With that in mind, be sure to check out myfico.com to access your auto enhanced FICO scores. Moving ahead, because your car lenders are in it to make money, they will always seek to get their hands on your lowest credit scores, which, as you've guessed it, means a higher interest rate for you and a higher profit for them. So they'll often leverage a credit spread to access your FICO Auto scores as well as traditional FICO scores, which are usually your FICO 8. For this reason, it's important to know beforehand what credit scores they are using to determine your interest rates, as that ensures you do not pay higher interest when you could pay a lower one. Let's talk about the 2 essential things you need to understand about your credit before buying a car. So the first thing you need to ascertain is what credit reporting agencies your lender is relying on. Is it Experian, TransUnion, or Equifax? If it is either of the 3 and you have delinquencies from past car loans or financing, a lender who leverages traditional FICO scores instead of data from these agencies might be your best bet. The second thing you need to understand is what credit tier you fall in. And let me just elaborate here. By knowing what credit tier you fall in, you can tell whether you qualify for a tier boost, for example, from near prime to prime, so that you can pay lower interest on your car. Even so, I must mention that tier boost will depend on just how bad a lender wants your business. It's in no way a guaranteed practice. Now, to the important part, how to fix your credit score so you can land the best interest deal when purchasing a car. The first thing you need to do to guarantee yourself the best interest rate when buying a car is to get rid of debt. That means taking a closer look at your credit card balances and paying them down accordingly. Basically, the lower the amount of your credit you owe, the better your credit score and car interest rate. Another thing you can do to fix your credit score before buying a car is to cease the application for new lines of credit. And why is that? Well, applying for a new line of credit leads to a hard inquiry, which undermines your credit score by anywhere between 3 and 7 points. Up next, let's run through the actual process of cleaning up your credit. Step 1 is to access your credit report and hear what that is all about. Register on FICO.com to access your credit reports. Besides, you can check with all credit bureaus, namely TransUnion, Equifax, and Experian to get your credit score. After accessing your credit report, check your personal information to ensure details such as your name and address are correct. The third step is to review your delinquencies. For example, late accounts, charge-offs, or collection accounts. If you have any of these issues but feel they are not right, dispute them by mail. While we are on this point, I recommend mail disputing instead of doing it online because the latter sees you lose a lot of rights in the validation process. Moving ahead, let's quickly touch on time frame for fixing your credit. So if you're looking to fix your credit before buying a car, it's important to note that it takes 2 to 8 months to iron things out. There's no way to pinpoint the exact duration because it all boils down to the unique situation on your credit board. But just to give you a rough idea, fixing hard inquiries before buying a car can take just 60 days. But for serious issues such as collections, late payments, and other major delinquencies, you may need more time. Based on personal experience, I'd say it takes anywhere between 6 and 10 months to fix your credit. And why is that, you might ask? Well, because it takes several rounds of disputing and haggling with credit bureaus to validate your credit info before any marks can be removed. There's just no shortcut to it. Fortunately, you do not have to go through all that trouble. I own a credit repair company, which means I help people improve their creditworthiness. So feel free to let me help you as well. So, do you have any questions regarding today's topic? Shoot them in the comment section below and I'll give you the answers. Support the channel by subscribing, liking the video, and sharing widely. Don't forget to tap the notification bell. Until next time.